Now the price has started to drop, and so far I've made a profit of $14. I closed the trade with a profit of $37. This is the TradingView platform and this is the MT4 platform. I will take the signal from TradingView, then place the trade orders on MetaTrader. This guide is aimed at traders who use MT4, which lacks advanced indicators. That's why I'm going to take you through a live trading session. As you know, many people still prefer trading on MT4. MT4 is known for its ease of use, which makes it a favorite among many, especially beginners who are looking for simple tools to execute their trades. Despite the limited indicators available, it remains an effective platform for monitoring and execution. I've just started a live trade on the euro-dollar, and I will explain why I entered this trade. As you can see, this is the price gap that occurred, and now I will target this gap. Now, it's crucial to keep monitoring the price action closely, as gaps can often lead to rapid movements. While the take profit is set, I'll remain flexible to adjust it as the market evolves. I have a downward trend line, and if I draw another parallel trend line, I get a price channel. This decision reflects my precise and effective use of the available opportunities in the market. This channel has a price gap, and as you know, in 90% of cases the price will return to fill this gap. So in this case, I targeted this gap and will sell the currency. As you can see, the indicator gave me a sell signal, and I relied on this signal to enter the trade. I've explained how this indicator works, and I'll leave the video link in the description box. If you want to understand more details about how to use this method, feel free to watch the video and leave your questions in the comments. I'll be happy to answer them. I entered at this point, and as you can see, the price may rise to retest this point before it drops. I expect this, but I'm following the price step by step. After watching the video, you'll be able to apply these steps easily in your daily trades and achieve the best possible results. Now the price has started to drop, and so far I've made a profit of $14. In this case, the indicator gave me all the targets and I can close part of the profits. As you can see, this is the entry point I should have entered from. When an opportunity like this arises, I need to make the most of the movement. Because I didn't enter at the beginning of the signal, I will secure the trade so that whether the price rises or falls, I don't exit with a loss. In this case, securing the trade is the best option to ensure a safe exit without a loss, regardless of the upcoming price movement. I will close the profits now, and that's enough for me. To choose another trading pair, I'll take a look at the currency correlation section on my Facebook. This site shows which currencies move together, like the Euro-USD pair, and those that move in opposite directions. I'll choose gold and explain why I selected this pair. After that, you can use this information to analyze market movements better and identify suitable entry and exit opportunities. These websites help you identify pairs that move in the same or opposite direction. It's similar to having multiple screens where you can monitor different pairs simultaneously. I'll assess gold's technical movements to identify reversal or breakout points, while comparing with similar pairs to confirm my analysis. I'll set the stop loss based on the indicator signal. I've entered a sell trade, and this will be a quick trade. I've set the risk at 5%, though in the first trade I set it to 2%. It's important to keep the risk percentage consistent for each trade, but in this case the success rate is very high. It's crucial to target areas where the price is likely to reverse for profit taking. I'll target this lower level. I'll monitor the price action, and if this line is broken, I'll exit the trade as soon as I see the first sign of trend reversal. Looking at the 4-hour chart, if we draw a trend line through these two lows, when we draw this line, we can see how the price respects this trend, giving us a strong signal that the movement is likely to continue in this direction. After marking the points and drawing the trend line, I'll switch to the 15-minute time frame to get a clearer view of the price action. On this shorter time frame, we can closely track how the price is moving and spot potential turning points or confirmations of the trend. As you can see, the price is steadily heading downward, getting closer to the trend line we drew. As the price moves in the direction of the trend line, we need to act quickly based on the signals that emerge. In this case, as the price starts to move down, we'll adjust the stop loss to the entry point. This ensures that we won't take a loss if the market reverses. Although the market might move fast, it's important to avoid making hasty decisions and stick to the preset risk strategy. As the price moves in our desired direction, we will continue to monitor the market closely to identify the best point to take profits. We'll also stay alert for any signs of trend reversal, and in that case we'll exit the trade immediately to minimize risk. Sometimes the price might reverse before hitting the target, so I'll manually close the trade. The price may reverse just 2 points away from the target, so once it gets close to the profit-taking area, I'll close the trade. I closed the trade with a profit of $37. Now I'll look for another currency to trade. Let's trade the Euro-Yen pair. If we draw a trend line lower, you'll see that the price respects this line. Every time it touches the trend line, it drops. Whenever the price touches this trend line, it moves down. So we'll consider this a bearish trend and enter the trade based on the indicator signal. In this trade, I'll use another indicator, which I explained in a previous video. You'll find the video link in the description box. It's important to remember that timing is critical when using multiple indicators. We want to ensure all conditions align before taking any action. Once the signal is confirmed, we can determine the entry point and prepare to manage the trade effectively. As you can see, when the price touches the trend line, the price goes down. This pattern has occurred several times, so we expect it to happen again. This will be a quick sell opportunity. I will look for simple EMA trend filter and adjust the settings to confirm this trend. Using this indicator, we get an additional signal that supports the sell decision. It is important to monitor the price action closely. If the price touches the trend line again, it is likely to fall again, which increases our chance of profit. After confirming with the EMA trend filter, I will check the CM Ultimate indicator for further verification. This combination helps ensure that we make an informed trading decision. While tracking the price movement, we'll also keep an eye on any potential risks. For example, if the price moves against us, We'll have to decide whether to exit at a certain point or adjust the stop loss to minimize losses. It's crucial to stay disciplined and stick to the trading plan. I will wait for the price to rise slightly before entering a sell trade. Afterward, I anticipate a downward move. Now we need to carefully watch the price action. If the price starts to pull back after the rise, that's the right time to enter the trade. We should be ready to set the stop loss in case the market moves against us, helping us limit the risk. If you've set exit points carefully, you'll be able to minimize losses and ensure your continued success in the market. It's also essential to define the profit-taking level in advance. By doing so, we have a clear plan for the risk-to-reward ratio. I've entered the sell trade, and this will be a quick one. At the first sign of upward movement, I'll exit the trade. As you can see here, there's a green candle surrounding the trade, which is a reversal candle. So we need to be cautious with this candle. These candles signal a weak trend. Although the price shows signs of a potential reversal, I'll stick with my strategy and continue monitoring the situation closely. If the price starts moving in the opposite direction, I'll exit the trade to limit any potential losses. It's always important to follow the plan and not be influenced by emotions while trading. As the price moves, I'll adjust the stop loss to the entry point once the price moves a bit in our favor. This way, I ensure I won't take a loss on the trade even if the market reverses. I'm also keeping an eye on the overall market sentiment to understand if there are any factors that might lead to unexpected volatility. If the price continues to show a strong reversal signal, I'll exit the trade even if it hasn't hit the stop loss, because it's better to lock in profits or reduce losses early than to hold on too long. The price might rise to hit the stop loss and then drop, so I'll exit the trade. That's okay, not every trade will be successful. That's why it's important to manage risk before each trade to ensure you stay in the market. Always remember to use proper risk management and avoid overexposing yourself to any single trade. This ensures that even if a trade doesn't go in your favor, it won't impact your overall performance significantly. It's important to remember that not every trade will be profitable, and sometimes you'll encounter a trade that doesn't deliver the desired result. But it's all about making the right decisions at the right time. If the price moves in the opposite direction, you need to be ready to make the right decision at the right moment. Once the trend changes or the price nears the exit point, it's wise to exit the trade with the least loss possible. This helps you stay in the market for the long term. I'll trade the euro dollar. I'll buy when the price breaks this trend line. This will be a quick trade. I'll wait a bit for the price to rise, then enter the trade. I'll be cautious in determining the right time to enter and monitor the movement closely. Once the price reaches a certain level or shows any sign of reversal, I'll exit the trade quickly. I've entered the buy trade now. This is a good area for profit taking. I'll monitor the price action closely, as if the price moves quickly toward the set level, I'll look for signs of weakness in the current trend, like reversal candles or emerging trend change patterns. These signals will help me determine the right time to adjust or exit the trade. When the price hits the nearest peak, I'll be ready to close the trade, but if I notice weakness in the trend or the start of a reversal, I might exit the trade early to protect profits. I'll continue monitoring real-time market movements and adjust my strategy based on market developments. However, it's important to always be ready to exit the trade quickly if the market conditions change. This strategy helps ensure we get the most out of price movements without taking excessive risks. If the price fails to break through the resistance, I will close the trade. I closed the trade. Many followers ask why I don't enter larger positions to make bigger profits. Simply put, if you exceed the appropriate trade size when managing your capital, you won't survive long in this market. Proper risk management and maintaining reasonable trade sizes are crucial for consistent and sustainable trading.